Applied Material released their latest quarterly figures Thursday after the market close. It's their ending of fiscal 2024, so Q4 fiscal 2024, and they gave us guidance for Q1 fiscal 2025. Now, the numbers were okay for the quarter. Small miss here, but overall okay. But the guidance was a miss on Q1 guidance, and so the stock was down 9.2% on Friday and brought down the rest of the chip stocks. As you can see, Applied Materials down 9.2%, Lam Research down 6.34%, KLA Corporation is not here on the list, but it was down also 4 or 5% or so, ARM down, ASML, Nvidia, etc., etc. The only one that was green, believe it or not, 3.16%, is SMCI. I did release a video about SMCI, comparison to 2018 when it was delisted. Go watch that, it's in the top right corner. Now switching back here to Applied Material, it has a market cap of $139.2 billion, a forward PE of 17.3 times. Year to date has not performed well right now. It's down 4.77%. It was up at 1.57% year to date, but since July, this stock was going down, down, down. And we've seen similar patterns with its competitors, also with ASML, with Lam Research, with KLA. Basically, those that manufacture the equipment, they've seen their stocks come down, whether it's because of China risk, slowing demand, Intel, Samsung demand coming down, restructuring other plans, etc., etc. That has affected companies like Applied Materials, Lam Research, ASML. But could this be a buying opportunity? Yeah, maybe because these are excellent companies that have an extreme importance in the semiconductor industry. So let's dive a little bit deeper, shall we? If you enjoy this type of videos, leave it the thumbs up, subscribe if not. We're well on our way to reach 60,000 subscribers by the end of the year. So if you're new here, hit that subscribe button. We're going to cover a lot of companies. And if you want to support me even further, do check out the link down in the description and in the pinned comment to the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. And thank you to all the new members. Now with Applied Materials, not only are you getting a company that is very important, it is growing top and bottom line, but it is also paying a dividend. It has a dividend yield of 0.95% and a shareholder yield of 3.21%. Actually, if you bought the stock back in 2020, you would be getting 21 cents dividends. Now you're getting already 40 cents. So that's a huge increase. Looking at the current average analyst price target, that sits 23.12% higher than the price we're at today. There are 36 analysts covering this company, 18 with a buy, 12 hold, 5 strong buy, and only 1 with a sell rating. Over the last 9.2 years, shares outstanding have come down by 33%. Now currently, if we look at some pricing metrics, I'm going to compare it to Lam Research and KLA in just a second, but just to look at Applied Materials right now, compared to the 5-year mean. We can see forward PE, basically the same, 17.5 times. EV to EBITDA, same thing here. Price to sales, 4.6 compared to 4.4. Price to free cash flow is a bit lower, 18.6 times. And then price earnings to growth, 1.37. So definitely not an expensive stock per se, although it is not much more expensive today or much cheaper than before, right? Compared to the 5-year mean. Now, if we do compare it to KLA and Lam Research, we can see the following thing. KLA has a higher forward PE, 19.8 times, Lam Research 19.2 times compared to Applied Materials. If you look at price earnings to growth, KLA also the highest here, 1.44, Applied Material 1.37, and Lam Research 1.21. If we look at price to free cash flow, that's in the last 12 months, KLA sits at 26.1 times, Lam Research 18.6 times, and Applied Materials 18.6 times as well. As for EV to EBITDA, also quite close here. KLA still more expensive-ish, 16 times, Lam Research 15.4 times, and Applied Material 14.5 times. By the way, Applied Materials is the biggest one, market cap. Then it's Lam Research and then KLA. Now for those that aren't familiar, this is basically it. You've got KLA, Lam Research, Applied Material. KLA, process control and inspection equipment. Lam Research, primary focus, wafer fabrication equipment, or WFE if you're reading the reports. That's basically that, plus etching and deposition. And then Applied Material, broad range of semiconductor manufacturing equipment and services. As for the key product and services, KLA, inspection systems, metrology tools, defect review systems, Lam Research, etch systems, deposition systems, and clean systems. And as for applied materials, you've got deposition, etch, clean, and material engineering solutions. The similarities here for all three are as follows. All are major suppliers to the semiconductor industry. They rely heavily on research and development, subject to cyclical demand in semiconductor markets, and have global operations and supply chains. So now you know. All right, looking at the fiscal year 2024 results, so revenue increased just 2% year over year to $27.2 billion. Then you've got a couple of segments here. You've got the Semiconductor Systems Group revenue of $19.9 billion. That's up 1% year over year. Applied Global Services revenue is up 9% year over year to $6.2 billion. Gross profit increased 4% to $12.9 billion. Operating income up 3% to $7.9 billion. And then earnings per share up 7% to $8.65. Looking at the first segment here, Applied Global Services, so revenue of $1.6 billion, that's record revenue, up 11% year over year for Q4, driven by robust growth in services, partially offset by a decline of $200 million equipment sales. And as you can see, since fiscal 15, it has grown at a CAGR of 11. And they say here that AGS is this, Applied Global Services, produces more than enough operating profit to fund the company's growing dividend. As for the semiconductor systems, for Q4, revenue was $5.18 billion, up 6% year over year, driven by leading edge foundry logic demand. DRAM sales declined 10% year over year, NAND sales flat year over year. We've seen this with a couple of other companies as well, where the rebound is not as fast as expected. Foundry logic sales increased 12% year over year. Now, when they talk about ICAPS is basically this: Internet of Things, communications, automotive, power, sensors, including F&L spending at 10 nanometer and above nodes. As for cash flows and shareholder distribution, they are committed to distribute 80 to 100% of free cash flow to shareholders over time. So talk about a company that does care about shareholder value. You've got one pretty good one right here. So for the quarter, this is basically the major overview. So net revenue increased 4.79%. Cost of goods sold increased 4.39%. Gross profit increased 5.24%. But you can see here that total operating expenses increased faster than revenue and gross profit. It increased by 7.6%. Net income is down 13.62% year over year. Why is that? Well, interest and income, that was same quarter last year. In this case, it's an expense, so that's already a major difference here. And then you've got, well, earnings per share diluted down 12.19% year over year. And so looking at margins for the quarter, they reached 47.5%. That's up 20 basis points year over year and 10 basis points quarter over quarter. As for operating margin, that's down 20 basis points year over year, but up 50 basis points quarter over quarter. With regards to China, so revenue in China declined to 30% of revenue, in line with expectations. It was previously higher. And on that point, we do have some questions from the earnings call. But first, the business outlook for the first quarter. So they expect total revenue to come around $7.15 billion. Market was expecting something closer to $7.25 billion. Non-GAAP EPS did beat what the market was expecting. It's around here, $2.29. Now, during the earnings call, they were asked a couple of interesting questions, so I do want to go over two of those. So one analyst asked the following: you mentioned in prepared remarks that you were seeing DRAM customers accelerate capacity plans, especially for HBM. I think most people expect HBM to continue to be strong spending, but are you seeing customers look to add capacity for conventional DRAM? To which we got an answer here. We do see customers adding capacity in DRAM in total, more wafer start capacity. I actually haven't calculated how much of that was driven by HBM. What we would say is about 10% of DRAM wafers right now are allocated towards HBM production, high bandwidth memory, and the high bandwidth memory demand is growing at a 30% rate. So we do see more capacity allocated each quarter to HBM, and we do see the growth rate there very high. My sense is that doesn't equate to exactly what's being added in the overall capacity footprint. But anyway, we do see capacity increase in DRAM customers, and we do see that market continue to be fairly strong. As for the China part, this analyst asked the following. It sounds like you still view 30% as a normalized level of China sales, but of course it did go higher than normalized into the 40% in recent quarters. So I was curious, is it reasonable that China could be below 30% in fiscal 25 if areas like leading edge foundry or DRAM improve and ICAPS remain more stable plus or minus? So Bryce here answered, I think that most of the variability for us will be based on the health of the ICAPS market in China. That's the vast majority of our business right now. We have served most of the DRAM and NAND business that we can serve, and we can't serve leading edge in China because of the restrictions. So most of the vast majority of the business is ICAPS, and it will just depend on how that ICAPS market evolves. Earlier, I shared that there is a couple of signals that say the rate of investment might be slower. Those are higher inventory positions and slow end markets that are automotive, industrial, image sensors, and analog are markets that are slower. But having said that, our Q4 and Q1 outlook is still strong for ICAPS across the world. And so we'll just have to see how that matures. We do expect customers to continue to add capacity over the medium term. And so what we see right now is a big red candle for the week because of that earnings report and small disappointment, let's say, plus maybe continued confirmation that, well, 2025 might not be the greatest year that was expected a couple of months earlier, right? A couple of months earlier, I think most of the analysts, most of the market was a bit more bullish towards, well, this part of the semiconductor industry. And now after ASML, after Lam Research, etc., it does seem like maybe the rebound will be slower than expected. So this is what we're seeing here. Let's see if this area could be a sort of rebound area because, well, that's where previously the stock was rejected. So previous resistance could serve as a support. Right now, RSI wise, we are not oversold, far from it. The momentum is definitely not with the stock, but yeah, maybe this area right here could serve as a sort of support area. If not, then yeah, maybe 150, that's also an area where the stock was previously rejected a little bit around those areas and then saw some small rebounds as well. So yeah, remains to be seen, but overall, I do think that these types of companies, yeah, maybe in the short term, they might see some weakness, but in the long run, these are extremely important companies for a very, very important industry. Whether it's Applied Material, Lam Research, KLA, or ASML, I think those are 4 excellent companies to own. Now, before ending this video, a quick reverse DCF. So we'll start with Applied Materials, trading 12 months, free cash flow of $7.487 billion, terminal growth rate 4.44, discount rate 8.48. You basically add those two numbers right here. Implied equity risk premium plus terminal growth rate. I also applied a 2% dilution for the next 10 years. And so the implied growth rate to justify today's price is basically 2.8% growth in free cash flow for the next 10 years. I mean, does that seem much to you? To me, not really. Moving to Lam Research, yes, you get some bonus content here. So Lam Research, the implied growth rate to justify today's price is 3.3%, and I've made the same assumptions as Applied Material. And in this case, again, I don't think that's too much to ask, 3.3%. Moving to KLA, here the implied growth rate is a bit higher, but this is also a company that's expected to grow free cash flow much faster than the others. So here we're seeing the implied growth rate at 7%. If you want to see a specific video about KLA, do let me know down in the comment section below. And yeah, if you enjoy this type of videos, leave it a thumbs up, subscribe if not, we really appreciate that. And yeah, I'll see you in the next one. Bye bye.